Clip champ, you better work this time. This is the third time I've tried to record this video. Okay, look, I got a bunch of books behind me, so you know that I'm smart. Just kidding. But all of these books about finance, about money, about growth, about personal prosperity. So let's talk about it. It's 7:25 in the morning. Let me check the stocks real fast. Calm down, everybody. I know you're going crazy. The stocks are going crazy. BMNR and Ethereum play looking good, looking good. SPRB, one of the biggest runners yesterday. That's not what this video is about, though. GLTO, today's big runner, Pharma, very similar to SPRB, by the way, running. That's not what this video is about. This video is not about, let's break it back down to one screen so I don't freak y'all out here, all right? OMEX, it's not about Odyssey Marine Exploration. It's not about that. It's not about USAR, US Rare Earth Inc. It's not about that. That is not what this video is about. This video is not about the quantum computing sector, and it's not about how I wrote a Substack post about this sector way back here. Barely anybody read it. That's okay, though. I'm going to keep going. It's not about QUBT, and it's not about QBTS. Look at these stock charts, guys. These are life-changing opportunities. Insane, okay? It's not about any of this. We're going to slow it way, way down. This video is about these brand new covered call sector ETFs. What the hell did I just say? Let me explain. So, SPY, the S&P 500 ETF. This ETF here gives buyers exposure to the top 500 companies in the United States. Well, let's say you want to go a little bit further than that and you want to invest in a certain sector of the economy. You think with AI, technology might boom. XLK. Here's the technology sector. This ETF will give buyers exposure to all the technology companies, the best ones: NVIDIA, Apple, Microsoft, AMD, Oracle. We can go on and on, okay? There are 11 sectors. We have industrials, we have materials, we have utilities, we've got real estate. Ooh, did I get your attention with that one? We got real estate. We got, which one have I not done? Communications, consumer staples. Well, now the investment gods have answered my prayer and they have created sector covered call ETFs. If you followed me at all about my monthly paycheck portfolio, a portfolio where I am trying to receive enough monthly income now to pay for my bills, okay? Investing typically takes a long time to get that dividend way up. Well, these covered call strategies now allow me to receive a lot of income without having to sell anything. See, that's a big problem I have with some people's theories. Oh, we invest now, we sell later on. No. As soon as you sell, you go back into cash. We all know what cash has done lately. I'm trying to continue to build that wealth. I'm trying to receive money without having to sell anything. Okay, so one of the ways that I'm doing that is by these covered call ETFs, REITs, high income funds, right? REITs just stands for Real Estate Investment Trust. Don't let that freak you out. Okay, so State Street, the original creator of the sector ETFs, has now created premium income funds over certain sectors of the economy. They just use covered call strategies. They buy the stock and then they sell calls against it. They pay out the premium. Boom. Just tried to explain it pretty simply. So let's look at the Consumer Staples Premium Income Fund. Okay. Assets under management, 1.2 million. Look, I'm really excited to check back in here in 3, 4, 5 years to see what assets under management they have. Let's look at the key features of this ETF. The Consumer Staples Select Sector Premium Income Fund employs an actively managed strategy that is designed to provide potential for current income while maintaining the prospects for long term growth of capital. If you know anything about my monthly paycheck portfolio, this just highlighted the same two goals of my account: receive monthly income, maintain/preserve account balance. Okay. The fund seeks to achieve its investment objective by investing in shares of the Consumer Staples Select Sector Spider Fund, selling call options on the Consumer Staples ETF to generate additional income. The fund allows investors to seek exposure to firms in the consumer staple ETF from consumer staple distributions in retail, household products, food products and beverages, tobacco, personal care, products industries. Okay. The expense ratio 0.35%. This is the fund's total annual operating expense ratio. It is the gross of any fee waivers or expense reimbursements. It can be found in the fund's most recent prospectus. Distribution monthly. The distributor, State Street Global Advisors. The investment manager, SSGA Funds Management. Listing information. Okay, so it has two holdings. It's going to be the XLP and then call options, selling call options against it. Yeah, so pretty badass in my opinion. And there are several of these. They almost have, let's go back to the search bar, Excel. They've got the consumer discretionary now. They've got energy, financials, healthcare, industrials, materials, real estate, and technology. I think these are very fascinating funds. They will definitely be a part of my monthly paycheck portfolio, but please do not take this as personal investment advice because I have no clue what your investment objectives are. I have no clue what your goals are. This is just for informational purposes only. My name is Luke Fenwick. I'm an investment advisor representative for the firm that I started, Fenwick Financial. Look me up online, follow me on Instagram, follow me on YouTube, follow me on Substack. Just look up Luke Fenwick. Trying to get a little richer every day. GP style, baby. Shout out to Gerald Peters in the Money Flow gang. Peace out. I got to get back to trading.